Welcome to Alpha Recap, your weekly market wrap from stockalpha.ai. We were back after the close with the big themes that shaped the week. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone! Great to be here. We sifted through 10 alpha research pieces this week and came away with 5 clear themes. There's a lot to unpack, so let's dive in.
First up, AI and data center compute again dominated the conversation. NVIDIA closed Friday at about $185.41 and was called out as the primary beneficiary of the AI wave.
And AMD closed the week around $208.44 with a peg of about 0.65, meaning the market is still pricing growth into its valuation, but it looks more attractive relative to headline multiples.
Put simply, the research argued that GPUs, CPUs, and AI model spending were the main secular growth engine for 2026 revenue upside. That wasn't just chip makers. Amazon and Alibaba also showed up as cloud and model platform plays.
Right? Alibaba closed Friday at about $162.51. Analysts liked its free cash flow, conservative balance sheet, and the push into generative AI through Qwen. But they warned about China-specific regulatory and macro risks.
Which brings us to the second theme. Crypto and fintech were converging. Riot Platforms closed near $14.45 with a market cap of about $5.4 billion and was highlighted for miner scale and Bitcoin sensitivity.
MicroStrategy finished the day around $134.93 and has a market cap of roughly $38.7 billion. That one behaves like a leverage play on Bitcoin price moves. Big upside when Bitcoin rallies, big drawdowns when it falls.
And fintech names like SoFi and Robinhood showed how consumer finance and crypto flows are blurring together. SoFi closed near about $20.86 and was noted for fast member growth but a high price-to-earnings ratio. The report quoted a trailing price-to-earnings ratio north of 50.
Robinhood closed the week around $82.82. It had returned to profitability and was getting crypto volume back. But analysts caution that crypto swings can drive short-term volatility for the stock.
Third theme, healthcare was driven by clinical catalysts and product momentum. Eli Lilly closed the week at about $1,058.18 and got a bullish nod for GLP-1 momentum.
Exactly. Lilly's manufacturing scale and market share gains were big positives. But the research reminded listeners to watch pricing, payer dynamics, and potential regulatory scrutiny. Those are the obvious model risks.
Fourth theme was capital allocation mattering again. Amazon closed the day at about $210.32 after the spending plan. The team said the spending could depress near-term EPS but create long-term optionality in AI and content.
And Alibaba was similar on that front, reinvesting heavily into logistics and AI. The message was the same. Management decisions can create headline-driven volatility, even where the long-term thesis remains intact.
The fifth theme was that volatility and binary catalysts were creating asymmetric payoff profiles. Names like Cellus Life Sciences were labeled bullish but high risk because of a binary clinical readout coming.
Cellus closed the week around $3.73, with a market cap of about $530 million. The Regal trial's overall survival trigger was the classic binary catalyst. A big payoff if positive, but a fast drop if not.
Let's walk through the company snapshots quickly, starting with Alibaba. Analysts were constructive. Core e-commerce, growing cloud business, AI push through Qwen, and a valuation that looked reasonable relative to cash flow.
But they emphasized sizing, core exposure for long-term investors, acknowledging China risks. In other words, don't go overweight without accounting for regulatory and macro tail risk.
Sell us. We already mentioned the Regal OS trigger. The practical takeaway was to treat it as a small, event-sized allocation if you're speculative, and consider hedges or defined risk option structures if you trade it.
For Riot platforms, the call was bullish for those who could stomach crypto cycles. The things to watch were hash rate growth, miner deployment schedules, and marginal cost per mined Bitcoin. Those operational levers determine profitability.
MicroStrategy got a neutral stance, a reminder that an equity wrapper on Bitcoin comes with corporate complexities, statutory losses, dilution risk, and governance issues. The report said compare that to miners or direct Bitcoin exposure depending on the economic lever you want.
SoFi and Robinhood were both neutral. SoFi had strong member ads, deposit growth, and fee-bearing products, but a trailing price-to-earnings ratio that implied a lot of future success. Robinhood had returned to profitability, but still leaned on crypto volume coming back.
On the chip side, AMD and NVIDIA were both bullish. NVIDIA was framed as the ecosystem leader with the software stack and hyperscaler partnerships. AMD was attractive because of product competitiveness and a lower PEG, which suggested more runway relative to its growth profile.
The nuance was important. AMD's product competitiveness and a PEG around 0.65 stood out as a reason to favor it as a growth-normalized play, while NVIDIA's leadership still came with earnings day guidance risk. The Q4 print was a focus.
Amazon was bullish, but with a caveat. The company missed EPS targets slightly and announced a sizable spending plan. That created near-term share weakness, but left long-term optionality in AWS, advertising, and AI-driven efficiencies.
Eli Lilly was bullish too. GLP-1 momentum, share gains, and manufacturing scale. But the valuation was rich. The price-to-earnings ratio was close to 50. So position size matters, given competition and regulatory scrutiny.
Now let's explain a couple of the technical bits for listeners. First, marginal cost per mined Bitcoin, why it matters. For miners, it's basically the break-even price that covers electricity, maintenance, and depreciation per coin. If Bitcoin trades below that number for a long time, miners suffer big cash flow stress.
And hash rate growth is the speed at which miners add compute to the network. More hash rate usually means more Bitcoin production for a given difficulty, but it also increases competition. So keeping an eye on deployment schedules and unit economics is critical.
Another concept, PEG, or price-to-earnings growth ratio. If a PEG is under 1, it suggests the stock's price may be reasonable relative to expected growth. That's why AMD's PEG around 0.65 caught analysts' attention despite a high headline multiple.
And the OS trigger in biotech? It's a final clinical outcome used to judge overall survival in cancer trials. It's binary by nature. Positive OS can re-rate a small-cap biotech overnight, while a miss can wipe out most of the market value.
On methodology, Alpha Research used a consistent multi-factor framework: top-line drivers, margin dynamics, capex and cash flow, plus balance sheet quality. They layered valuation checks and scenario analyses, which is why the reports call out both headline multiples and cross-checks like PEG.
They also recommended position sizing and hedging for event-driven names. For example, defined risk option strategies like vertical spreads or collars around earnings or trial dates were suggested to capture upside while limiting downside.
Putting it into practice, the research gave a clear set of allocation implications. First, overweight structural AI and cloud franchises if you have conviction and time horizon to tolerate earnings volatility.
Second, keep biotech and binary event names small and hedged. Celis was a classic example. Big upside if Regal goes well, but it deserved only an event-sized allocation in a diversified portfolio.
Third, for crypto exposure, choose the economic lever you prefer: miners for operational exposure, corporate holders for price leverage, fintechs for flow-derived, indirect exposure.
Fourth, Monitor capital allocation headlines closely. Amazon's spending plan showed how management choices can create headline volatility. Those moves can create re-entry opportunities if you're a long-term investor.
On uncertainty, the team flagged regulatory risks for China names and GLP-1 pricing questions for healthcare. Crypto liquidity and macro conditions were also highlighted as potential swing factors for high beta names.
They also emphasized concentration risk in AI demand. So much of the upside depends on hyperscaler budgets and model cycles. If CapEx slowed, even leaders could see pressure in the near term.
Looking ahead, the research agenda had several near-term watch items. Top of the list, NVIDIA earnings on February 25th, where data center demand, supply constraints, and margin guidance were expected to move market.
They plan to track Celis trial updates for any interim OS commentary or a concrete data date. If you had exposure there, that was the place to pay close attention.
Riot's operational cadence was next, new hash rate additions and miner deployment schedules. The team intended to update their marginal cost model as new guidance arrived.
Also on the list, Amazon follow-through on capital allocation and quarterly disclosures for SoFi and Robinhood on deposits, member ads, and crypto volume. Those metrics were going to determine whether neutral stances became actionable buys.
Let's finish with a crisp set of takeaways so listeners can walk away with something actionable.
Takeaway 1. Overweight AI compute exposure through names like NVIDIA and AMD. If you have a multi-year horizon and can tolerate earnings volatility.
Takeaway 2. Treat biotech and event-driven small caps like Celis as speculative small hedged positions. Those are pulse trades, not core holdings.
Takeaway 3. For crypto exposure, pick your lever. Miners, corporate holders, or fintechs, and size positions to your conviction and liquidity tolerance.
Takeaway 4. Watch capital allocation headlines closely. Amazon and Alibaba showed that reinvestment can create short-term pain for long-term gain, so don't confuse headline volatility with a broken thesis.
And final takeaway, use options and defined risk structures around discrete catalysts like NVIDIA earnings and the Celis Regal trigger to capture upside without unlimited downside.
That wraps our thematic recap for the week. If you want more detail, Alpha Research said they're planning a playbook on options strategies for those very events and an updated break-even model for Riot based on hash rate guidance.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
See you next week for the post-earnings reaction to NVIDIA and the next round of Catalyst updates. This was Alpha Recap from stockalpha.ai. Good night and trade thoughtfully.